Hey, welcome. My name is Britton Johnson and good morning. It is a rainy but cool day today here in Dayton, Ohio. I'm going down the Iron Horse Trail today and you are walking and talking with Britt. My name is Britton Johnson. I'm the founding partner of Voluntary Insurance Partners, and we work with small businesses and business owners that really care about their employees. They want to do something for their folks, but understanding when it comes to benefits, man, a budget comes into play. This is where my team is the best in the world. Hey, if you're that employer, definitely go to voluntarypartners.com. Check us out, give us a call, and I will take care of you and hook you up with one of our people, all right? We've got the best team on planet Earth when it comes to small business health solutions, and we got it together, man. All right, let's talk about part two of the evolution of policies and where the market's going. Now, in the previous episode, I spoke about cancer policies versus lump sum critical illness with cancer, right? Today, on this video, I'm gonna talk about life insurance with living benefits versus a traditional long-term care policy. So for the longest time, and I was one of these people too, long-term care was the greatest thing since sliced bread, right? Now, what is long-term care? Long-term care is supposed to be there for you financially if you were in a long-term care situation, a nursing home, assisted living, things of that nature. Here's the challenges with traditional long-term care, okay? Traditional long-term care insurance, number one, you have to be at a licensed facility, okay? You have to be at a licensed facility in order for it to pay, and it's typically a reimbursement, essentially. So your family is paying out the money for long-term care benefits. I had a situation in my family a couple of years ago where we were looking at a bill of $16,000 a week, right, for long-term care. That's outrageous, it's crazy. And they had, my family had purchased this long-term care policy a long time ago. I won't mention the carrier's name, but they rhyme with Slon Whamcock, all right? And this policy had what's called an elimination period of 90 days. Now, here's the caveat. One of my family members was in long-term care. They were battling cancer, and it was a rough situation. It was near end of life. And my family had paid out money to this policy, a significant amount of money to this policy, just to learn that they did not start the elimination period until she was actually in this licensed facility, even though they had sent out a nurse months prior. So we had a 90-day waiting period before that could even kick in, and she was in the long-term care facility for 90 days before hospice. Unfortunately, that money that we had paid out into premiums for years and years and years paid $0 in a claim. Needless to say, I was pretty disgruntled about it, all right? You would be too, and you should be. Those are loopholes that a lot of these companies do, all right? Not fair, not cool at all, and I'm not a fan. All right, let's talk about the evolution though, and what has changed over the market and the better way to go. Now, what percentage of policyholders or employees in a group context are going to pass away? Well, that's 100%. But what if I told you that 70% of them are going to need long-term care at some point? 70%. That's pretty significant. And that's based on Kaiser Family Foundation studies. So what we offer and what we recommend is a life insurance policy, a permanent life insurance policy, that will provide money that you can advance the death benefit on if you were in a long-term care situation. If you cannot perform to what's called ADLs, activities of daily living, that's, you know, transitioning, bathing, feeding yourself, those sorts of things. Those things that you need help with and assistance with in a long-term care scenario. The cool part about having a life insurance policy with living benefits is, number one, it doesn't have to be a licensed facility and it's not reimbursement. So with one of our most popular plans, you can advance up to 70% of the death benefit on this life policy for those long-term care needs. And if it's serious enough, we can even request an administrative waiver of any elimination or waiting period, which is pretty darn amazing. So this is a policy that you're going to use. By the way, if you bought a long-term care policy and you just never used it, then what? We just kind of wasted that money, right? This is a policy that is going to be there for your family as a life insurance plan. It's a permanent plan, and it will give you those long-term care coverages that you may need. All right, pretty significant. So if you cannot perform 2 activities of daily living, a physician says that, guess what? You can advance up to 70% of that life insurance to help you during that time, which is so more flexible. It could be friends or family caring for you. It doesn't have to be a licensed facility. It's not a reimbursement, and it doesn't, you know, find all those loopholes and ways not to pay. So plus it costs less, just so you know, than that. And, oh, by the way, voluntary insurance partners, we have an exclusive underwriting offer with this policy that guarantees the issue of $100,000 in coverage. So take advantage of that if you're that employer, if you're that employee. My people are the pros. They know this inside and out. Guys, this is the evolution and the market of the business. Just like you learned before, cancer plans, they're kind of older, and the way that they do claims aren't as well as a lump sum critical illness with cancer. And now long-term care has gone to life with living benefits. So anyway, my name is Britton Johnson again. Do me a favor, subscribe, thumbs up, comment, share this video, man, share it. Spread the word. This is just good information that gets out to people in our industry, or employers or employees that want to know a little more about benefits. Thank you so much. Hope you're having an awesome, awesome day. We'll see ya.